Asia Pacific Strategist at BNP Paribas Securities now joins us on the phone line from Hong Kong. Manishi, good morning. Thanks for taking time out. I'm reading from your report. You are still quite bullish on India, and you would adopt a contrarian call. But at this point in time, do you think the risk reward still favors the bulls in terms of the market levels?
I would think on balance, yes, because what we faced around the beginning of this year was a clear overvaluation of India around the beginning of 2015. When, compared to Asia ex-Japan average, it was almost 2 standard deviations higher than the long-term average. There were also concerns about oil prices and other commodity prices climbing back to their old levels and therefore hurting India's inflation trajectory, current account deficit, and fiscal deficit. And at the same time, we were hearing in both local and Western media that the new administration's policy initiatives were getting delayed, and as a consequence, the whole investment recovery hypothesis would get delayed well beyond 2015 and possibly into late 2016 or so on and so forth. I think many of these concerns have been addressed. And yes, I forgot to add the concern about a deficient monsoon leading to a food inflation spike, which we were hearing repeatedly about 1 month ago. But as a consequence of what has happened of late, many of these concerns have, possibly diminished quite a lot. Oil prices have again corrected quite sharply, and along with that, quite a few other commodity prices as well. That's always good news for India, and in the light of what's happening in China right now, we think commodity prices would have far more downside. I think, in terms of the new investment announcements or the decline in stalled projects, we're actually beginning to see the investment climate also improve slightly. We actually interacted with quite a few companies of this region, in China and Taiwan, which have announced their new investment projects in India. We've seen that from quite a few Taiwanese companies. And yes, we understand that these companies are actually quite serious about their India investment plans. So we think that whole investment climate, changing for the better, that may actually happen slightly earlier than what anyone anticipated. And when you put all this together, particularly in the background of this massive sharp correction that we have seen in China, it would appear that the FIIs' interest in India is actually beginning to come back. If you look at the trading patterns or the FII buy and sell numbers, right from the middle of April, the FIIs had begun to sell India. But over the last couple of weeks or so, such flows begin to be reversing now. So, yes, I would think in the medium term, India still remains one of the more desirable markets in the Asian context. And as a consequence, we have maintained our overweight stance on the Indian market in our Asian portfolio.
Hi, Manishi, but it's the China troubles which have caught our attention. As a part of your Asia strategy, BNP was overweight China. Do you still maintain that? Is there a risk of you cutting down or paring down your exposure to China now?
In our Asian portfolio, we are still overweight China. We think that the domestic Asia market, which had become overextended as a consequence of the massive rally, and remember that massive rally was completely decoupled from economic or company-wide fundamentals. But the overseas listed Chinese market, which is the Hong Kong listed H shares, which are at a very significant discount to the A shares, that offer a good entry opportunity to investors who had earlier lost out. There are good quality companies trading here. Many of these have strong growth opportunities with good corporate governance. We're still clearly overweight on China, and we maintain that stance. And we think that this sharp correction has actually opened up an opportunity to select good quality companies in the overseas listed Chinese market.
Okay, by the way, this sudden collapse, the second round of collapse that's taken place now. Yes Bank is down 6%. Tata Motors is down 5.5%. Not looking good at all. Manishi, it might be a buying opportunity from the medium to long term, but purely in the short term, do you think things could get a bit ugly. Where do you see the flow for the market now? Do you think there's a good chance that the index revisits 8,000, or would the floor have shifted higher to maybe 8,200 or thereabout?
Well, it's difficult to take a call on the very near term, because when you talk about Nifty at 8,000, we are really talking about how much? About 4 to 5% correction from the recent peak. It was close to 8,300 or 400, right? So, in an active and volatile market like India, 4 to 5% correction is not really much, given the circumstances that we are living in. If you combine the European concerns and closer home, what's happening in China, then, some kind of a correction of 4 to 5% magnitude is not really too unusual.
Okay, so let me put it this way, Manishi. If the market goes to 8,000, would that be a buying opportunity, or do you think there's a genuine risk of a slightly bigger correction taking place and the Nifty going to maybe 7,500, not immediately, but over the course of the year, and this being a bit of a negative year?
Right. As a fundamental analyst, it's difficult for me to put an exact number to that level where the market would settle. But, there's something I would like to point out, which is that suppose the market corrects 5% or 7%, there would be stocks which would correct more than the market. And these are typically the high beta stocks. Which are the high beta sectors? They are possibly industrials, private sector banks, some of the consumer discretionary stocks. And there are good quality companies in these sectors. So if we find that after the market is corrected, there are, good quality growth oriented companies which have corrected more than the market, then I definitely think that from a longer term perspective, they would offer a good buying opportunity.
Do you expect stocks like Tata Motors to correct over and above the 30% fall we've already seen because of concerns in China?
Well, I wouldn't comment on a stock individually, but yes, there are a few companies which have direct correlation to what's happening in China. Tata Motors is definitely one of them. In general, if you look at which sectors have been affected or could be as a consequence of what's happening in China, these are the ones that are mostly concerned with Chinese consumption or Chinese industrial demand. As a consequence, we are seeing commodity prices also declining, like oil or some of the hard commodities, like iron ore, coal, or steel. As a consequence, these material companies all across the region, or the companies which are somehow directly linked to Chinese consumption, these are getting disproportionately more impacted than some of the other companies in India. So, as long as this, the situation does not stabilize in China, we're likely to see underperformance by these, strongly linked companies. It's something that we'll have to live with in the near term, I'm afraid.
Okay. Manishi, what about, the larger picture? In your report, you write about this FI outflows that we have seen and the fact that they've cut the India overweight. But is the Indian market still overowned from FI point of view? And are we likely to see some more outflows? Because that impacts the near-term behavior of the market.
Our analysis shows that India is, most FIIs, be it Asia, Japan, or global emerging markets benchmarks, they're overweight India right now. They're overweight possibly to the tune of about 3 to 4% compared to the benchmark weights. If you go back about 2 to 3 months, then I think the extent of that overweight was even higher. But many FIs have cut down their India position by about 1.5 to 2%. And we think that most of them are not really looking at reducing their India position significantly from the present levels. Now, what happens in the very near term as a consequence of risk aversion is difficult to say, because in times like these, there's always a tendency for global assets to gravitate towards the so-called safe haven destinations, like the United States, for example. But, at least if one has a medium-term outlook, I don't think most FIIs would like to reduce their India position significantly from here. And that's the impression I got. I was, meeting investors in the UK and European region over the last week and a half. And I think, the concerns that were voiced about India about 2 to 3 months ago, they seem to have diminished significantly.
Okay, Manishi, we'll leave it at that. Thanks so much for joining in. So far, BNP continues to maintain their overweight rating, not just on India, but even on China. And it does offer, the correction offers an interesting time to tank up on select quality stocks. Time for a short break. When we return, we'll continue our focus on the markets with Tithankar Patnaik or Mizuho Bank on the other side.